Hello guys and welcome back for another video. So what if I told you that while Bitcoin's price has been dropping, the smartest money in the market has been quietly buying more than ever? And what if the real story behind Bitcoin right now isn't what you see on the charts, but what's actually happening behind the scenes? Because right now, there's a growing disconnect between price and reality. And by the end of the video, you might start questioning whether this dip is actually a setup for something much bigger. So let's start off with something that doesn't quite add up. Over the past 3 months, the number of whale wallets holding over 100 Bitcoin has increased by 753. And that's nearly a 4% rise. And at the exact same time, Bitcoin's price has dropped by 20%. So if you think about that for a second, price is falling, but large holders, the people with the most capital, the most experience, and the best information are accumulating. So the question becomes, why are they buying while everyone else is panicking? Because historically, this kind of divergence doesn't happen randomly. It often signals one thing: smart money is positioning early. And it gets even more interesting when you look at what institutions are doing right now. So, over the past month, institutions have accumulated over 81,000 Bitcoin. That's not just a lot, that's 6 times more than the amount of Bitcoin. That's 6 times more than the amount of new Bitcoin being produced. Let that just sink in for a second. Demand isn't just strong, it's overwhelming supply. And this is happening quietly, under the radar. No hype, no headlines, no immediate price explosion. Because this is how institutions operate. They don't chase pumps, they accumulate slowly, strategically, and often when sentiment is at its worst. And right now, demand from funds and companies is at its highest level since October 2025. So, what happens when demand massively outweighs supply, but price still isn't moving up? This is where things can get very, very important. When large players absorb more Bitcoin than is being created, it creates something called a supply squeeze. And in simple terms, there's less Bitcoin available on the market. And now we combine that with this. Institutions are buying quietly over time without pushing the price up too quickly, which, creates a strange environment where price can stay volatile, it can go down, but in the background, supply is being drained. And this is exactly the kind of environment where strong hands build positions before larger moves happen. But now there's another theory going around that could explain even more of what's happening. And this one almost sounds like a conspiracy. There's a narrative circulating right now that connects Bitcoin to geopolitical events in the Middle East. Here's how the theory goes. Pretty much, Iran was mining Bitcoin at extremely low costs, around $1,300 per coin, much cheaper than almost anywhere else in the world. And these operations were allegedly controlled by the IRGC, the Islamic Revolutionary Guard Corps. And for years, the theory suggests this Bitcoin was being sold on the open market, not for profit, but to bypass sanctions and finance imports. Which means there may have been consistent, hidden selling pressure in the market that no one fully accounted for. And then something changed. The US struck Iran's energy infrastructure. Mining operations were disrupted, hash rate dropped rapidly, and just like that, the hidden selling pressure may have disappeared. So now ask yourself, if a major source of constant selling suddenly vanished, what does that do to the supply? And now, connecting all these dots, whales are accumulating, institutions are buying more than 6 times the new supply, and potentially one of the largest hidden sellers in the markets may have been removed. At the same time, price is still weak, still volatile, still shaking people out, and this is exactly how early accumulation phases tend to look. Messy, uncertain, and easy to misread. But beneath the surface, the structure is changing. So if this demand continues, the probabilities start to shift. Downsides become more limited, support becomes stronger, and eventually, when liquidity returns to the market, price tends to catch up fast. So the real question isn't just where Bitcoin is today, it's what's actually happening behind the scenes. Because by the time it becomes obvious, the move may have already happened. So if you found this useful, make sure to stick around. There's a lot more going on in the market that most people realize. So thank you guys for watching, and I will see you in the next one.